The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here today, and if you didn't like yesterday's movements in equities, the good news is that you've pretty much reversed them today, which is great.
And a little wild.
The bad news is that if you didn't like yesterday's moves in bonds, you're not really getting much help there. So we'll talk about, specifically what's going on in those markets shortly. But want to start off by talking a little bit about yesterday's Fed meeting and what went down during it. I happened to be in the car during it, so I wasn't watching. I was listening, though. The nice thing about, modern technology is that you can hear Kevin Warsh basically anywhere. Like it's great. And so I listened in the car, and then I came in this morning, and I watched the press conference, so I actually went through it twice.
Hey, look, Kevin!
Gotta be honest.
What's that one?
That's from Up.
Okay.
Gotta be honest, I don't recommend watching a Fed press conference twice. It's just not ideal, but I always take notes on these things, and obviously I'm not taking notes in the car, so I was like, well, I gotta do it. So to be fair, I did watch it on 1.5x speed this morning.
Okay.
So that I got through it in, less than the 45 minutes that it took.
Okay.
So here's the big thing. Warsh comes out yesterday and, first of all, gives a 7-minute speech before he takes questions. Mm-hmm. What Powell used to just read the Fed's statement and then take questions. Warsh kind of talked, more about, what he wanted to do in this and that. And he reiterated, we will deliver price stability, that's the paramount, thing that we're focused on here. And went through a bunch of stuff about, we're really looking at all these different things and we're trying to determine, the best way to go about this. Okay, that's great. So Warsh kicks off his press conference and, again, he gets asked these different questions. And the first one came from Steve Leisman from, I think, Leisman CNBC, right?
Correct.
Yeah. And
So far in this press conference, he's been talking for the 7 minutes, and markets have not fallen apart yet.
No, markets didn't really do much of anything at first. And Leisman asked the question, which is, hey, you said that you don't want to send a message to the market, but you want to hear what the market's saying. Tell us what you think the market's saying. And he basically just poo-poos that. He's like, rather than being like, well, the market's telling me this, his quote is, what I'm trying to do is get an unfiltered message from the market and let buyers and sellers for treasuries tell us how we're doing. And Leisman follows up, well, okay, how do you think it says that you're doing? And this is the first place where things get kind of interesting. As he goes, we've seen a material tightening, not just in nominal rates, but in real rates. So remember, when we talk about interest rates, there's two ways that you can look at it. The first is nominal, which is, hey, the 10-year went from 4.5 to 4.6. The second is real, netting out inflation or inflation expectations, what's happening to interest rates otherwise. And over the last couple weeks, real interest rates have been going up. And so Warsh said, we've seen a material tightening in not just in nominal rates, but in real rates. And we like this because the market is doing the work for us that we want to see. And again, I always put my notes in here after, the quotes. And my note says, well, in his first meeting, he said he was encouraged by rates falling after he took over, specifically real and nominal. So
Which is it?
Like right off the bat, I'm sitting there and I'm going, so in your first meeting, you said you liked the fact that interest rates were coming down because the market was understanding that you were serious about inflation. Now you're saying that you like that interest rates are going up because the market is tightening for you so that you don't have to.
And important background here, again, we've talked about this at length, but this is a Fed chair who walked into the job with more credibility concerns than I think any Fed chair in recent modern history. Again, because of the nomination process, because of the things that the president has been saying in the background, there were some very big questions asked during his confirmation hearing and by financial media about credibility. How serious are you about combating inflation? So that's kind of the backdrop for all of this.
So again, even through this, markets held up just fine. Like there were no major problems or anything. In fact, if you look at like basically during his 7 minutes and then like the 7 minutes after, markets rallied. Like it was okay. Like that's fine. And then something happened starting at around like 2:45 or so, where markets leveled off. And where this was, I went back and kind of looked at the timestamp on this and matched up what it is. And he basically here's where he lost the market yesterday. Is someone asked him, you guys are kind of just waiting. Like, what are you waiting for? Like, you're talking about, high inflation and wanting to get it down. Like, what are you waiting for? And he goes, this is a period of watchful thinking, not watchful waiting. And I heard that in the car and I like almost threw up.
Kevin!
I was just like, my dude, like, I know that you're the Fed chair and everything, but if you're not doing anything, ultimately, like, you are choosing to wait. I don't care how hard you're thinking. Like, if you were a teacher at a school and a kid came in and you're like, hey, Kevin, where's your homework? And he's like, well, I didn't not do it. I was just still thinking about it. You'd be like, well, you didn't turn in your homework. Like, you ultimately didn't do it. And so this is kind of where things started to go downhill. And it gets followed up like 5 minutes later where someone asks, okay, so like you're not waiting, but can you characterize like whether this was like a hawkish pause or a dovish pause? Or, like, the question was like something along those lines. And he goes, well, I wouldn't characterize what we did as anything like a pause. I would characterize it as a rigorous review of the economic situation and big hard questions.
Which is just
but
BS
you
speak.
Paused.
Yeah.
Like, you didn't raise or cut interest rates. Like, you did nothing. Like, no one cares how hard you're thinking. They care about what you're doing. And this is what we said, like, heading into this, is that ultimately markets are going to judge Warsh. If he doesn't want to be judged based on forward guidance and what he's saying about what they're going to do, then he's going to get judged based on what they are doing. And what they did yesterday was not hike. They paused, which is fine. Like, I don't think it's the end of the world. But
the markets seem to take that moment, though, as a don't piss on me and tell me it's raining moment. Like,
yes.
Don't tell me that it's not a pause when you didn't do anything.
And so from here, what we ended up with is the S&P 500, right as he said that, was at like 74.50. It then fell almost 2% from that point till the end of the day and closed, down, I forget exactly how much, like 113 points or something, like over 1.5%. Which again, it's one day. Let's not make too big of a deal out of this. But bigger part is what was going on in the bond market, in my opinion.
Yeah, very much so.
Where, and again, like, you can look at the tape and see this, like, right on, the money and everything, where pretty much, and remember, the actual, bond market for treasuries doesn't close at 4, closes at 3, so you don't get the same, read through the exact same way. But basically, the 10-year during that time went from 4.62 up to 4.7. So he lost 8 basis points in an hour, which is a large move for that period of time.
This is moves that are similar to what we were seeing in April of 25, when the president was rolling out his tariff plan. Like, a couple of days, bonds moved so dramatically that the president himself acknowledged that we had to change policy because it moved so much.
And specifically, it's not just that the long bond got hit. It's bonds sold off, which normally, again, higher yields then attracts, money into your currency because you're offering more in terms of yields.
Yeah.
But the dollar sold off and gold caught a bid, which normally, like, higher rates will typically be, okay, higher rates, great, I want to go to that currency, and gold gets pummeled because I can get higher rates and I don't need to worry about, holding on to purchasing power because I'm getting paid more interest.
So I mentioned at the beginning that he went in there with credibility concerns. Yesterday's meeting was plain and simple a Fed credibility trade.
There are two possibilities as to what happened yesterday. The first is that Warsh's credibility is shot and the market is going to put it to the test over, the next couple Fed meetings. The second is that this is intentional because it is actually true to a certain extent that one possibility of the long end blowing out is higher interest rates on the long end are going to raise the cost of borrowing for businesses and households, and in doing so, potentially slow the economy. So, you can ask the question, was this by design? The counter to that is there are better ways to get the long end to move up than just doing this. Specifically, you could commit through forward guidance to, we're going to raise rates probably the next 4 to 5 meetings, and that'll push the short end up, 1.25%, and the long end might go up 0.5% as a result, but you could still, do it. It's not that the long end just, stays put during that.
And that doesn't screw your currency.
And the other piece that you have questions about on this is, okay, it's fine that the long end goes up. Is it going to move up in terms of real rates, net of inflation, or do we start to see inflation expectations become unanchored because they don't trust the Fed to rein in inflation because the lack of action is troubling? So these are things that we'll have to watch. I want to take a quick break, but there's more to unpack on this. I have 3 pages.
7 to 8 more thoughts.
I have 3 pages of notes that I need to get through, and you're all going to listen to them.
Kevin.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill. a life-saving moment. Heart Walk brings communities together to create health and hope for every heartbeat. Every walker who joins Heart Walk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Fresh, local, in season. Celebrate National Farmers Market Week, August 2nd through 8th. Visit your local farmers market for peak summer produce from sweet corn and heirloom tomatoes to peaches and blueberries. Every purchase supports local farmers, strengthens your community, and helps keep fresh food accessible across Massachusetts. Sponsored by Mass Farmers Markets, supporting over 200 farmers markets statewide. Find a market near you at massfarmersmarkets.org.
From breaking news to market analysis, follow the Financial Exchange Show on X and watch the show live every day. This is the Financial Exchange Radio Network.
The Financial Exchange streams live every day on YouTube. Subscribe to our page and follow market activity all morning long, only here on the Financial Exchange Radio Network. Just search the Financial Exchange on YouTube and hit that subscribe button.
All right, so we're talking about Kevin Warsh's second Fed meeting yesterday, and I think ultimately where I land is this. We've now been through two meetings, and the Warsh Fed hasn't undertaken any monetary policy action. They haven't done anything.
True.
Which is fine. Like, you don't have to do anything. Warsh continues to talk about we will restore price stability, and, price stability is the most important thing to him. And at some point, in my opinion, I think we started to see it yesterday, but I think the next, 2 to 3 months, the market is going to test, okay, are you actually serious about what you're saying, and are you going to back it up with action? It's one thing to say, hey, I want to listen to the market and I want the, market participants to engage with each other. But remember, part of the reason why the Treasury curve gets priced the way it does is because it's ultimately pricing in Fed action on, certain possibilities of what could happen. And so we still don't really understand what the new Fed's, what's called their reaction function, basically, if Y happens, will they do X or Z? We don't understand what that framework looks like, and so that does mean, and we've talked about this, that you probably need a little bit more of a premium built into bonds because there's more risk if you don't know exactly what they're going to do. We said this at the outset of Warsh, coming on. So I think my view is, look, yesterday, if I'm being 100% honest, pretty bad day for Kevin Warsh. I don't think he was particularly strong. I don't think he was particularly convincing. Basically, everyone that I respect who follows monetary policy more closely than I do kind of looked at yesterday and was like, this isn't good. Like, this isn't it.
Yeah, to be clear, if you are a Fed chair who is basing a lot of your policy on how markets react to you, and encouraging markets to react to you, yesterday markets gave you an F. Right, so that's the problem.
We don't like this.
If you want to say a bunch of stuff and then the markets react unexpectedly to what you say, that's one thing. But when you basically tell the press and the general public, hey, I'm going to let markets dictate and determine how we're doing, yesterday investors gave him a very bad grade on that meeting.
So I think it doesn't mean that Warsh's tenure is going to be good, bad, or ugly. I don't know. It's sure. Again, as he said himself, it's been 2 months.
Yep.
So I'm not here saying, okay, this is going to be horrible. What I am saying is, yeah, yesterday was bad, and if you continue to get that kind of performance, it's going to be a problem. If I were Kevin Warsh, the things that I would do, and I would do them quickly, very, very quickly. Number one, I would find like one of my task force, I believe he has a communications task force. I would have them wrap their work up and say, we're getting rid of the after meeting press conferences and we're getting rid of the summary of economic projections. Because I don't think they're useful for what he wants to do. I think if he really wants the market to, base its moves on, hey, what are we doing, not what are we saying, then take those, have the task force recommend that you're not going to do the press conference anymore. He's not required to.
He's not, but I would love to see the market reaction to that announcement.
It can't be worse than him actually talking yesterday.
I'm with you.
The market might actually be like, okay, great, we don't have to do that again.
Yeah.
Because it was, again,
it was messy.
It was not pretty. Other things, though. And this is the piece that I think you have to come back to is core PCE right now is at 3.4%. Fed funds rate is at 3.5 to 3.75. Based on basically every rule that you have out there about where monetary policy should be set, Fed funds rate should be higher. At some point, if inflation continues to remain in this range, specifically core inflation, the market is going to say, you're not serious about this unless you're hiking. And maybe that comes at the next meeting in September. Maybe it's the November one. I don't know. Is it November or October? I can't remember exactly where it falls this year. But in any case, it feels like we're going to get that test for Warsh sometime in the next 3 to 4 months. And every Fed chair gets tested. Powell did during his first year or so when he was like, yep, the balance sheet runoff's on autopilot. Markets tanked heading into the end of 2018. Powell was forced to pivot on that. He didn't hike interest rates again. It was a whole thing. So the market will test the Fed chair just as they test everyone historically. It's not a new thing just with Warsh, and he's going to have to prove that he can navigate that.
The president's comments weren't immensely helpful yesterday afternoon, either for anyone that missed them. He was quoted, as Warsh was speaking about being serious on inflation, the president said, quote, I know he'd love to see lower interest rates, but he's got a board, and it's a political board, and they want to keep rates up. So, again, that's not helpful if you're Warsh trying to, insist on independence. But we have 30 seconds, Chuck. I have to insist on talking about why this really matters to the people that didn't watch Kevin Warsh's press conference and don't invest in 30-year bonds.
Yes.
This is critically important because
mortgage rates will be higher today than they were yesterday.
Yeah, but more importantly, an independent central bank that's credible on inflation is critical to the inner workings of our entire financial system and why the United States gets all the advantages it gets in financial markets. It's why we can borrow for less. It's why we are the default currency for all sorts of trade. And nothing that Kevin Warsh said yesterday is a threat to any of that. But that's why this is critically important. That's why an independent and credible central bank is integral to the entire U.S. financial system.
Look, plain and simple, if investors don't believe you're going to be credible against inflation, they will demand higher interest rates from you in order to lend you money because they know that otherwise more of it will be eaten away by inflation. Plain and simple. Quick break here. We've got Wall Street Watch next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. For veterans, every day is a commitment to service. This Veterans Day weekend, be part of something meaningful at the DAV 5K Boston. Join the thousands of runners and walkers at Fort Independence on Castle Island for a day of community, remembrance, and gratitude. Proceeds help fund the programs and services provided by the Disabled American Veterans Department of Massachusetts. To register or make a donation, please visit dav5k.boston. That's DAV5K.Boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Busy day on Wall Street as investors react to the Fed leaving rates unchanged, and remarks from Fed Chairman Kevin Warsh that left some uncertainty about the path of rates moving forward. We also saw a tale of two earnings reports from tech giants. Right now, the Dow is up 0.2% or 332 points higher. S&P 500 up 1.2% or 93 points higher. NASDAQ rallying over 2.5% or 652 points. Russell 2000 is up 0.4%. 10-year Treasury yield up 3 basis points at 4.66%, and oil pulling back modestly, trading at $84 a barrel. Microsoft rallying 15% after it beat earnings and revenue expectations driven by robust cloud growth. The company's Azure service topped $100 billion in revenue for the first time. Meanwhile, Meta sinking 9% after it reported earnings that missed estimates and posted a revenue guidance that disappointed. Investors are showing more concerns over the company's spending on AI. We'll see more big tech earnings after today's close, where Apple and Amazon will report. Elsewhere, Yum Brands reported mixed second quarter results and said the Cyclospora outbreak linked to Taco Bell impacted its sales in July. However, the stock is up over 2%. Teladoc tumbling 29% after the healthcare services company posted revenue that came up short and also lowered its full-year revenue guidance. And Starbucks is up over 2% after the coffee chain raised its full-year outlook and reported growth in same-store sales of 7.9%. I'm Tucker Silva, and that is Wall Street Watch.
Let's see. We've got some earnings stuff to get to. Can we do a little GDP talk first?
Sure.
So this morning we got GDP that came out, and I saw widespread disappointment that it came in weaker than anticipated. GDP for Q2, this is the first reading, came in at 1.5% versus expectations of 2.1 to 2.2%. And so naturally you get, what does this mean? And here's my take on it is when you look at the underlying data inside of there, the weakness that is in this quarter is coming from areas that are probably not likely to repeat. And also, if you look at kind of the core, what I think most people would qualify as core GDP. I know that doesn't exist, but real final sales to domestic purchasers, basically how much are businesses and households actually buying and transacting for, economic activity. That number came in at 3.9%, which is the highest that we've seen since Q1 of 2023. So I look at this, and my takeaway is not, hey, Q2 GDP was bad. It's much more, hey, there were some one-off things with inventories and imports and exports that dragged this down, and inflation was much higher than you'd like to see during the period. But the underlying, activity that you saw in terms of, again, real final sales to domestic purchasers, so netting out inflation and, what you're seeing there, indicated that you had a nice bounce back after 2 weak quarters. So I think the headline number on GDP, not great. Again, 1.5%, it's not like that's awful. It's slower than you'd like to see, but again, we're talking a country that doesn't really have much in the way of population growth right now, and you need productivity to kind of pick up the torch. Hey, if you can do 1.5%, that's fine in that kind of environment because there are two ways that you can grow GDP, productivity or more hours worked. And if you're not growing the population, hours worked is kind of tough to pull. You don't really see many moves upward in that direction because people are generally working as much as they want to or choose to at any particular point in time in the aggregate. So I actually didn't think this was a very bad GDP report. I know that you look at the headline number and you're like, 1.5%, what gives? I think that the underlying data suggests some additional strength beyond that headline, and I think it's totally fine. So I am not someone who looks at that GDP number and says, this is a problem. I think it is a perfectly cromulent number and am happy to ride with it. Let's talk about earnings now. Which ones do you want to do first, good or bad?
Bad.
All right. Dear Mark Zuckerberg, stop spending money on crap.
Yeah.
That's the message that the market is sending to Meta, whose stock, as of this very moment in time, I want to make sure I get the number right. Yep, it's down 9% still.
So the spending, like Alphabet's, ticked up. Revenue is weaker compared to the other companies that are increasing their spending. And furthermore, the story about how this spending is going to pay off for you, among all of the big hyperscalers, Meta's is most confusing. And in fact, Zuckerberg seemingly acknowledged that a bit when he said that they might be they're getting bids to sell some of their excess compute capacity that they could sell today at very favorable rates compared to what they built it out for. And so, yeah, I look at this kind of similarly to some of the other trends, like the investment in the metaverse over the last few years, which is you're pouring money into something. Fortunately for you, you can actually resell it to other people that know what to do with it, but you don't seem to know what to do with it.
Right now they can.
Yeah.
And this is the thing, they're like, well, what are you going to do like with your compute capacity that you're building out? Well, maybe we'll sell more of it to other people.
So you're a utility company.
Maybe it'll help us to sell more ads because we can use AI to do that. Maybe we'll develop our own models that people will want to buy. Well, which is it? Because right now, none of this is working for you. Like, it's not showing up. And here's the problem, is that, well, it's actually, there are quite a few problems, and I guess they kind of dovetail into the big one. But when you look at what Meta is telling you, it's, okay, we're raising the lower end of our expense outlook. So we're going to spend more than we thought we were going to previously. But we're also issuing a lower than expected sales outlook. So we're spending more and selling less. But yeah, of course my stock's going to be down 9% if that's the message that I send to people. You contrast that with the lovely Microsoft, who, to be fair, has had just a brutal run over the last year or so, going from $550 a share down at one point to $349, but now up 15% today, back in the $450 range.
So Microsoft, on the other hand, tells you we are not changing how much we're spending. We're keeping our spending in line.
We're staying disciplined on the CapEx side of things, or at least relatively speaking.
And our sales are going up.
Correct. That's why you're up 15% today instead of down 9%.
So I want to focus on just two narrow parts of this. Microsoft says we are not spending more on CapEx. Meta says we are spending a lot more on CapEx. I know there are other things to these earnings that are contributing to them being up and down. Microsoft, the one who said we are not spending more and they are showing cost discipline, stock up 15%. Meta saying we are spending more, stock down 9%. I have a tough time writing that with the rest of the market right now, which is showing semiconductors up massively, semiconductor equipment up massively, computer hardware up massively, and then the rest of the tech sector just kind of struggling along, right? You just rewarded a company who said we are not accelerating our spend on all the stuff that is benefiting in the market right now. I know I shouldn't read too much into single day moves, but like that was the message that I took away, was investors are rewarding companies that are being more disciplined on their CapEx.
So there are a few things going on that I think make it tough to get accurate signal today. The first is that semiconductor stocks as a whole have gotten bludgeoned in the last 2 months.
Agreed.
Like you talk about the semiconductor index, I think it was off like 35% from its peak as of yesterday. Like the Korean market, I think, was down like 40% in the last month. So like part of this is just, hey, semis kind of got washed out over the last month.
Yeah.
As part of that, we got to talk about the dangers of just like anointing heroes based on a few months of performance and stuff. How many of y'all listening have ever heard of someone named Leopold Aschenbrenner?
Oh, Leo? Yeah.
Yeah, good old Leo Aschenbrenner. So the answer is none of you.
Right.
Okay. I heard of him like 2 months ago because everyone was tooting his horn because he started a hedge fund. He's a former, I think, OpenAI guy.
Correct.
And he started a hedge fund investing in AI companies with a bunch of leverage and was up like 400% in the first quarter of this year or something like that.
Let me know if you've heard that story before.
People were like, wow, Leopold's a genius. It comes out today that yesterday he had to liquidate his entire book. Like, we didn't know this when I woke up. It was just, well, he had to make like some big liquidations.
Yeah.
Now it's, and this is the headline from CNBC, AI investor Leopold Aschenbrenner forced to unwind all public stock positions after steep losses.
You just got margin called.
Not just margin, like, had to sell everything. And now is hunting for more capital because all the money's gone. Like, that's the deal. And so part of this is, look, once the bodies start washing up on shore after you have hedge fund blowups, okay, like people start picking through the wreckage and they're like, okay, we can buy this, we can buy that. So combination of Semiconductors have been the worst place to be in markets for the last month and a half, and you just had a very public hedge fund blow up, specifically focused on that area. Yeah, does it make sense to me that Micron's up 15% today? Not in the context of, like, nothing with their business materially changed, but whenever you have these big washouts, you get these big bounces. The problem that you have, volatility in upward direction is still volatility. It doesn't suggest investors have any confidence in where this stuff is valued. This is easy come, easy go money. Like, that's what this is.
Yep.
And so if you're willing to buy on a day when this stuff is up 15%, then hey, when it goes down 15, you're going to be the first trying to sell it then. Because you don't have any conviction. You're just buying because everyone else is. So trying to reconcile all of this, I think that the message that markets are trying to send is, hey, we're going to reward CapEx discipline. The other thing that I do want to point out, Microsoft yesterday made a change in their depreciation schedule for their data centers, extending the depreciation on the actual buildings by 10 years from 15 to 25. That makes me feel like
your P&L statement is becoming opinion.
We're starting to get into some funny money stuff here, and eventually, remember, what ultimately matters isn't P&L, it's cash flow.
We got to take a break. I don't
we
think
don't
we
have to, but we should.
We should take a break. I don't think we're done talking about this. Yeah, I think we got to continue talking a little bit more about these earnings and then the earnings that are coming tonight.
Yeah.
Quick break. We'll be back with that next.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
From market moves to retirement planning strategy, follow the Financial Exchange on Instagram and stay up to date on the business news of the day. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Register and join more than 800 runners who have already registered for this year's DAV 5K on Saturday, November 7th at Fort Independence on Castle Island. Registrations are on a record pace, so if you want to participate, head to dav5k.boston and sign up today, or please consider making a donation. Your gifts help provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
Mike, anything else that you want to say about Microsoft or Meta before we move on to today's party, which is Apple and Amazon?
I think the main takeaway here was, amongst other things, Microsoft is being rewarded for cost discipline around AI spending. If that is a trend that holds, and I'm not sure it will because there was a lot other stuff that was wrong with Meta's earnings, but if that theme begins to take hold, that spells problems for the rest of the AI industry.
Yes.
Right? Like, again, the reason that all of these companies are being treated as winners is because recently they have been. If you can make a semiconductor, whether it's a good one or a bad one, somebody is willing to buy it. And investors this morning are telling Meta and Microsoft that they are going to reward them for return on investment. They're going to reward them for discipline. And if that is the case, then there's just a lot of companies out there that are selling garbage that are not likely to continue to be able to do so. So that's my main takeaway. And I'm not sure it's the right conclusion to draw because, like I said, there is a lot of other stuff that's wrong with Meta's earnings rather than them just spending too much money. But it's two giant companies in a row who got their stock hit for lacking discipline on their spending.
Can we go back to the hedge fund blow up for a second also, just because it's kind of related? So, again, this hedge fund called, you can't make this stuff up, called Situational Awareness.
Yeah, bro.
That's the funniest name for a hedge fund that just got blown up.
Like, I'm sorry.
That's something you see in a scouting report for an NFL player.
You can't make this stuff up that's what it's called. So this hedge fund that was run by this guy, Leopold Aschenbrenner.
Who's 25.
Here's the deal.
Let's not poo-poo him for being 25. Like, okay. But yeah.
No, that's an old man name. I just was pointing that out.
Okay. No, here's what I'm going to poo-poo him for, because, again, when you take other people's money like this and then blow up, it's one thing to do it with your own money. I have sympathy for that because it's kind of like, it sucks. Like, I've been there. Like, I've lost my own money, and you're like, ugh, that really sucks. When you do it for other people, you start asking questions. And one of the questions that I think is reasonable is, the S&P 500 is 3% off its all-time high. How do you blow up a hedge fund that invests in equities with the S&P 3% off its all-time high? The answer is way too much leverage investing in way too risky areas.
Yep.
That is a person who probably needs to go through like 5 to 10 years of growth and repentance before they should be managing money for institutional investors or large investors again.
I don't have all of that much. Again, I don't know this guy's full bio, but you said that he was a former OpenAI executive.
Well, so here's the thing. His path is actually... So this is technically his second blow-up. He also... I don't know exactly the work that he did, but he was somehow tied into FTX prior to their blow-up as well.
So I'm just going to say...
When you have 2 blow-ups in 4 years, you should probably sit the next one out.
Well, I'm also going to say, who gave you money? kind of on that institution or whoever it is that said, hey, go invest this money for me. Yeah.
We know, actually. I'm pulling from Wikipedia here. So it looks like he was backed by the Collisons, what do they do? They're from Ireland, and it looks like... Okay, one of them is the founder of Stripe. They're the founders of Stripe. Okay. So again, like, not dummies, like founders of probably the biggest fintech payments platform in the last 20 years.
Mm-hmm.
So not dummies. Someone by the name of Daniel Gross, who co-founded a company Q that was then bought by Apple to help out with AI there. And someone named Nat Friedman, who is currently the head of product at Meta's Superintelligence Labs, but Situational Awareness managed $20 billion in investor capital. So a lot of wealthy people gave him a lot of money to manage, and it doesn't sound like it went well. Buyer beware and everything, but when you blow up 3% away from all-time highs, it suggests a lack of robustness and risk management in your approach.
Yeah.
Everyone investing loses money. You don't blow up 3% from all-time highs. Quick break. Hour 2 coming up in a bit.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The document may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Join Heart Walk today. Find your local Heart Walk at heartwalk.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins Heart Walk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local Heart Walk. Extraordinary starts with you. Find your local Heart Walk at heartwalk.org.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our new guide this month is titled Talking to Your Kids About Inheritance. Mike, what are some of the considerations for what needs to be brought up in conversations with your kids about their potential inheritance?
Well, first things first, I don't think it's always necessary that you do have the conversations, but just beware that if you don't, it can lead to confusion after the fact, especially if it's a non-equal distribution of assets. It can oftentimes lead to infighting. We've all seen that one before. And it can oftentimes lead to people making financial decisions because they're unaware of an inheritance that could be coming that might have been different had they been aware that someday, hey, this might be coming my way.
They're never easy conversations to have, but they're typically easier before there's a crisis as opposed to having to have them during or after the crisis.
Well, I mean, to put it plainly, at a certain age, you might not be able to explain the decisions, and that can lead to even tougher conversations. But what I would urge people is to, think about how to have those conversations because, like I said, on more than the number of occasions that I would like to see, I have seen inheritances tear families apart. Unfortunately, that's what money can do to people. And if you have those conversations up front and early on, it can at least go a long way to potentially prevent that.
The guide is titled Talking to Your Kids About Inheritance, and you can request it by calling 800-393-4001. You can also request it online at armstrongadvisory.com, and that phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Chuck, it's Mike, it's Tucker, and that's actually Ben. I'm sorry. Your eyes look the same over the computer.
You can't see Tucker's eyes over the computer.
That's the bit.
Oh, got it.
Thanks, Roethlisberger. I want to talk a little bit about what's going on in markets today, because it's better than yesterday in some markets. It's worse than yesterday in others. We'll leave it at that. No, what's actually happening? So the Dow is up 0.25%, 125 points. Not much movement there. S&P is up 1%, about 70 points. Was previously up 90-ish, so a little bit of a pullback from the highs, but still good start to the day. And the Nasdaq Composite's up 2.25%, about 555 points. This on the back of what's driving the Nasdaq. Two big earnings reports yesterday. The bad one, Meta. They reported that their revenue for the next quarter is going to be a little bit lower than anticipated and their expenses a little bit higher. That's a bad combination. It typically makes you less profitable. And so, as one would expect, Meta stock down about 8% on that news. On the other side of things, Microsoft came out with a really nice quarter, and so their stock is up 14%. And somehow, Microsoft driving the entire chip-making sector higher, even though it's gotten blown up over the last, 4 or 5 weeks to the tune of 30% drawdown in semiconductors. Some of this is also just, hey, after a big drawdown, maybe you see a little bit of a bounce. And a big AI-related hedge fund got carted off yesterday. The fund, completely truthfully and entirely ironically named Situational Awareness. They reportedly this morning, according to CNBC, had to liquidate all of their positions after their prime broker was unable to secure sufficient collateral to meet margin calls. And so this hedge fund run by a 25-year-old OpenAI and FTX veteran is now basically, we don't know exactly how big the losses were, if it was all of the $20 billion they were managing or just a good chunk of it, but it wasn't nothing. And so after you have, kind of the sight of that happening, you get people picking through the wreckage and they try to be opportunistic because, hey, maybe some of the selling the last couple days was them liquidating, and now that selling pressure's gone, okay, you can get a little bit of a short-term bounce. Other breaking news this morning. Wow, this is going to be a wild one. UEFA, the European Soccer Federation, just announced that they are going to boycott the 2030 World Cup if FIFA attempts to try to sell the World Cup to private investors. What this would mean is that the 2030 World Cup, if this were to follow through, if FIFA follows through and UEFA does, would not have any of the 55 members of UEFA in it, including the reigning World Cup champion, Spain. So we'll see what ends up happening here.
Is England in there too?
Oh, yeah.
So let's see. Who are the final four? England, France, Spain, and Argentina.
Michael, so three of the final four will
three quarters
not available.
It's not just like three of like the final four. Like when you talk about like the teams here, you're talking Belgium, you're talking Croatia, you're talking Denmark, England, France, Germany, like Italy. Like,
well,
okay, to be
they
fair,
weren't going to be there anyway.
To be fair, the Italians haven't made a World Cup in 3 cycles now. A little painful to me, but hey, it's what us Italians do. We have periods of brief excellence sustained by
Listen, they've been focusing on the baseball world. Whatever.
We're very good at the baseball these days.
Yeah.
Yes, we're very good at the baseball. Yeah. But like these would be the teams that aren't in the 2030 World Cup if this were to come to fruition. So a little bit of drama related to FIFA maybe trying to wring a few too many bucks out of this thing, but we'll see what happens there. Other things moving in markets. Sorry, I had to get to that headline because I saw it go across and was like, wow, this is exciting. Yesterday, the 10-year Treasury sold off. Today, still selling off at 4.675%. So you've got a decent move that has happened there. And looking at the dollar index, not moving in the direction that you want, but there's a couple things happening today. So yesterday, we did see yields up, dollar down, which is not great, not what you want to see. Today, you've got yields up, dollar down, but part of this is because the Japanese Ministry of Finance staged a massive intervention in the yen today to keep it from weakening further, and so that is depressing the dollar. I wouldn't read too much into the dollar move today because it is a noted intervention from a central bank that's happening there. So
likewise, then don't read too much into gold moving up because the dollar's falling.
Gold you can read into.
Yeah.
Gold you can read into.
Up another 1.5%.
And that is notable that you now have back-to-back days where gold's moving in that fashion because, again, you don't have central bank interventions in gold in the same way. And that's not what's happening today there. Crude oil basically flat, down 12 cents a barrel, 84.34 on West Texas Intermediate. So no major movement on that front. I think big takeaways from yesterday, Kevin Warsh's second Fed meeting. His first one, we said, look, you're saying all the right things. Like this, his first one went pretty well. Second one, if you're grading it, I think if you averaged like the grades from most economists and people who study monetary policy, somewhere in the D range is probably what I think they would give him. I share that view that I think yesterday was basically about as bad as you can get from a Fed chair at a press conference. It's one meeting. He has a chance to rebound and kind of reset, but this market is going to test him where, hey, if you say you're serious about inflation but you're not hiking, well, then you're not serious about inflation and the bond market's going to sell off to make you prove it.
Yeah, I can't call it an unmitigated disaster. He sounded confident.
It was a mitigated disaster.
Yeah, he confidently was... He confidently... said words that made no sense.
He said a lot of things that made no sense, and he did it with a dismissive, smarmy demeanor that made it sound like he was the smartest person in the room and everyone else should just shut up and listen to him.
Yeah, that's kind of how I take away from
it. It's kind of how it came off.
Yeah.
So we'll see how he bounces back. Again, it's one meeting. I'm not ready to say, like, okay, he's going to be, awful forever. There's plenty of Fed chairs who have, bad starts to their tenure and, bounce back. Look, Warsh, after his first meeting, we were saying, okay, like this is all the right stuff that you want to say, like this is all the right stuff that you want to do. If you average the two meetings, you have you're right in the middle of the road. Like he's been fine.
Yeah, unfortunately, that's not how this works.
But the trend is down. Yesterday was not good, whereas his first meeting, I thought he was very good.
Bond yields moving up. The 30-year Treasury now up over 5%, highest level that you have seen, by the way, since 2007 on that 30-year Treasury. That is one of the series along the curve that moved up in yield yesterday as investors sold it off. Short-term interest rates came down. Long-term interest rates went up. What are markets telling you there? Effectively, that they don't believe Warsh is going to follow through on fighting inflation. That was the message from markets yesterday.
Let's take a quick break. When we return, we'll talk about a couple geopolitical issues, including the Middle East and China, next.
Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange. Protecting your assets doesn't always mean giving up control. Get Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts. Learn how to protect your assets while maintaining planning flexibility. Get your free guide today by calling 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Every mile can make a difference for a Massachusetts veteran. The DAV 5K Boston returns to Castle Island on Saturday, November 7th for a family-friendly day of community, remembrance, and support. Whether you run the 5K, join the 1 mile walk, or make a donation, your participation helps further the mission of the Disabled American Veterans Department of Massachusetts. Honor those who served. Sign up today at dav5k.boston. That's dav5k.boston.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The document may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Fresh, local, in season. Celebrate National Farmers Market Week, August 2nd through 8th. Visit your local farmers market for peak summer produce from sweet corn and heirloom tomatoes to peaches and blueberries. Every purchase supports local farmers, strengthens your community, and helps keep fresh food accessible across Massachusetts. Sponsored by Mass Farmers Markets, supporting over 200 farmers markets statewide. Find a market near you at massfarmersmarkets.org.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show.
All right, so let's move away from the Fed and tech earnings and do a little bit of good old-fashioned geopolitics. You know, that's what we're really looking for here. So here's the thing. Every day you get a piece published by, I don't know, someone talking about hey, like, Strait of Hormuz traffic fell today, or Strait of Hormuz traffic went up today, and honestly, the pieces are useless. Because it doesn't matter what it did on any one particular day, because the next day isn't correlating to what happened the day before. You have days where, traffic fell to 0, and then the next day it goes up to, like, 10 ships, and then it goes back down to 2, and ultimately, here's the deal. Like, there still is not free-flowing traffic through Hormuz, and there's not going to be anytime soon. Like, that's what it is. Like, until you can actually get a conclusive stop to all of the
drones, missiles,
airstrikes, everything in the region, you are not going to have a consistent flow of traffic there. The more troubling pattern is that things are expanding, and that drones targeted ships that were at port in Egypt recently. You've got all kinds of problems happening in the Black Sea as well, related to the Ukraine conflict. So this is not just one conflict that's causing problems with shipping of energy at this point. It's multiple conflicts in multiple parts of the world, and it's tough to see either of those resolving in the near future. So, you might get optimistic one day, you might get pessimistic the next. The big thing is, hey, you're not getting back to normal operations anytime soon.
Right. And remember that the further it expands, it's not merely a price issue, it's also a supply constraint issue, right?
One feeds the other.
We don't know when we're talking about shortages. Hopefully it's a long way out, but if you see this conflict expand, the danger of China running out of reserves, the U.S. running too low on reserves, and
you won't see shortages in the U.S.
No, that's not what I'm saying. But globally, you may see shortages should it continue.
If this continues, you will in the next 2 months. Yeah. It is unavoidable. I mean, look, if you talk about poorer parts of the world,
sure,
you already do have that. Like take a look at parts of Africa and Southeast Asia, and they do not have the fuel supplies that they needed for this summer. Like they simply don't. It hasn't affected us because we're not big trade partners with those areas, and they don't provide vital inputs to the U.S. economy. But you talk to people in the poorest third of countries in the world, and they will tell you, we have not been able to get the fuel that we need because of these conflicts that have been going on. Turning now to China. So earlier this week, there was a proposal from the FCC. I don't know why the FCC is the agency that's involved here, but they issued it. I'm sure that there's a reason that I'm just missing on it. But the FCC said that it intends to restrict the imports of humanoid and animal-like robots from China on national security grounds, which I think is
good.
Great. Yes, I think there are all kinds of concerns that I have about Chinese-made robots being used in the United States. So I don't really care.
Every sci-fi about robots I've ever seen tells me this.
Yes, so I don't really care which agency is responsible for this, other than that it holds up and there aren't, broad exceptions that end up being carved out.
Sure.
So China is saying, well, look, this is going to undermine the stability of the U.S.-China, trade relationship and disrupt the stability of global industrial and supply chains. Well, okay, but it's still the right thing, and I don't think it's really going to disrupt supply chains unless you start, restricting exports of rare earths to get the U.S. to try to turn around on this.
Mm-hmm. So, raise your hand if you think this is the wrong move for the United States to go down, but certainly not one of those areas that I hope anyone's willing to negotiate on is Chinese-manufactured humanoid robots on our streets. I'm not comfortable with cars, definitely not comfortable with humanoid robots.
No.
I'm barely comfortable with humanoid robots as a general proposition, let alone ones that are manufactured in our biggest economic competitor.
I've come up with what I think is a solution for how I could be comfortable with them.
Humanoid robots?
Yeah. You ever play video games?
Yeah.
You know how when you're playing the big boss at the end of a level, they've got a weak spot that you got to target. It's their neck or under the armpit or I think every humanoid robot should be manufactured with a weak spot that is susceptible to like a human punch that will like turn them off.
Yeah, we're gonna need to go a little further than that for me.
What do you mean?
Like, I need a 5-year-old to be able to turn this thing off. So
a 5-year-old's punch.
Yeah.
You know, like so, like put it like the kneecap.
Yeah.
You know, like if you punch it in the knee, it falls over and can't get up. Like something like that would make me more comfortable with them.
Yeah. From what's the lab in Boston that General Dynamics?
Boston Dynamics.
From the robots that I keep seeing from there, they look pretty durable.
Well, and they look like they'd be able to move fast enough that you can't punch them in the knee.
Yeah. Yeah.
But like that would be my like robot's whole selling point. It'd be like, you know how you have like the tagline? It'd be like Chuck Dynamics, the
Punch
one with
me.
the knee punch. You know, like something like that.
Sure.
I understand why they won't commit to that because it, you know.
Can we just install them all with a clapper?
No.
Save another business.
No.
Long-gone business.
No, because that's too easy to reverse. Like it's clap on, clap off. Like, you don't want to accidentally clap it back on when you're trying to turn it off.
Yeah.
Here's the thing. Robotics, I am eagerly anticipating in the next few years. You know how ChatGPT was the wake-up call for generative AI?
Yeah.
And how everyone took note after that? There's going to be something robotics-focused that has, like, pardon the expression, like the killer app for robotics, where it's all of a sudden everyone goes, oh, this isn't just science fiction.
Yeah.
And this is ready to take the next leap. And we're getting there behind the scenes. Like I see what's going on in terms of the costs of like actuators and motors and things like that. I see what's happening with sensor technology, not just for like eyes and ears, but for, you know, robots' sense of touch, which matters for more practical, you know, uses and things like that. And we're close. I just wonder if the one thing that we may struggle to get over is just the weird factor, and if that's too much. But for business purposes, like companies won't have the weird factor. They'll look at it and be like, here's how it can help my bottom line. And I think, by the way, robots don't have to be perfect. The way that I look at this is, let's say that you have to intervene on a robot 20% of the time. If one person, even if there's overlap there, if one person can manage a fleet of 3 or 4 robots,
sure,
how much more productivity can you get from that?
Yeah. Amazon feels like they might be the first to break through on. I mean, they already use quite a bit of robotics in their business as it is, and would seem to be a decent bet in terms of where that goes first. But
I'm
we'll
more
see.
comfortable with robots than drones.
That's not where I agree.
I don't like ceding the high ground to machines.
Yeah.
Is kind of what it is. Maybe that could be the robotic thing. Like there's a height limit.
That would make them far less intimidating.
It would be. You know, people have asked.
Although then we're going to end up with a bunch of like spider-looking robots, and that's not going to be comfortable either.
People ask the question like, why are we building like humanoid robots? Why not more specific ones? And it's true. Like in certain instances, like task-specific ones are more useful, which is why like Amazon in their warehouses has a whole bunch of non-humanoid robots. The reason why humanoid robots are getting so much interest is because the world is functionally built around the human, like the humanoid figure. And so it's a more flexible approach where you don't have to specialize, and so you can get the cost down by mass producing to be able to do many different things. That's why. It's not that that figure is inherently like the best way to do it. It's just that the world is already built for people around 6 feet tall to be able to do things.
Can't reach the counter, can't do a whole lot of stuff.
Except like flying an airplane. So you don't. If you want the safe spot from robots, it's probably on like a Ryanair flight where they won't be able to fit. Let's take a quick break. Wall Street Watch is next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
The most important part of an inheritance isn't always the money. It's the legacy you leave behind. Hi, this is Mike Armstrong from the Armstrong Advisory Group. For many families, an inheritance represents more than assets. It reflects a lifetime of hard work, values, and the hope of helping future generations. Our new guide, Talking to Your Kids About Inheritance, explains why sharing your intentions can be just as important as the estate plan itself. The documents may determine where your assets go, but a conversation can help your family understand why. You'll discover ways to talk with your children about your wishes and help them learn what matters most to you while working to create a stronger foundation for their future. You can get your free guide today by calling 800-393-4001. That's 800-393-4001 or request it at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Busy day on Wall Street as investors react to the Fed leaving interest rates unchanged and remarks from Fed Chairman Kevin Warsh that left some uncertainty about the path of rates moving forward. We also saw a tale of two earnings reports from two tech giants. Microsoft stock is rallying 14% after it beat second quarter earnings and revenue expectations, driven by robust cloud growth. The company's Azure service topped $100 billion in revenue for the first time. Meanwhile, Meta stock is sinking 9% after it reported earnings that missed estimates and posted revenue guidance that disappointed. Investors are also showing worries over the company's spending on AI. We'll see more big tech earnings after today's close, where Apple and Amazon will report. Elsewhere, Yum Brands reported mixed second quarter results and said the Cyclospora outbreak linked to Taco Bell impacted its sales in July. However, the stock is up 4%. Teladoc shares are tumbling 27% after the healthcare services company posted revenue that came up short and also lowered its full-year revenue guidance. And finally, Starbucks is climbing 1.5% after the coffee chain raised its full-year outlook and reported growth in same-store sales of 7.9%. I am Ben Kitchen, and that was Wall Street Watch.
Mike, we got a couple pieces here from one from CNBC, one from Barron's, both talking about the kind of long-sighted idea of the 4% rule in retirement.
So let's start off with what it is.
Yeah, what do they outline about what it is and whether it's still accurate?
Yeah, so the 4% rule created, I believe, in the 70s or 80s by a financial manager, described somebody who retired at 65 with a portfolio that was 50% allocated to stocks, 50% allocated to bonds. And he looked through every market up until that point in time and found that if the owners of those accounts take 4%, no more than 4% of their investments out every year to live off of, then there was not a single market scenario for their expected longevity where you would have run out of money, even through markets like the Great Depression. So it's kind of looked at like a, holy grail rule. Hey, if you've got enough money where you can live off of 4%, then you're in a pretty good spot. What is being written about now are some, holes being punched in that, as well as some people trying to stretch the 4% rule. Like, well, what if I adjust it for inflation? What if I can do 5%? And then, the mere fact that, an average 65-year-old couple today, at least one of them making it to 90 or 95 years old is a heck of a lot higher, the probability, than it was back in 1980. Mm-hmm. And so there's two sides to all this, but I think while the 4% rule can be a good starting point, it's definitely not an end-all, be-all. And furthermore, it can, depending on the situation, sometimes lead people down the wrong path of either working longer than they have to or spending less than they otherwise could, depending on the circumstances, right? And this is where some more detailed planning comes in. Let's say that you can't pull off 4%, that you need to be spending 5 or 6%. So long as you've done the work to understand how much your spending might drop in the future, then that might be acceptable, right? Like, hey, yeah, we're spending a lot of money now because we're traveling a lot and we own 2 homes, but we're going to sell one 15 years from now. Or, hey, I run a real risk of running out of money if I have a long-term care scenario. Well, okay, but are you still going to own your home if that happens? And so this is where a lot of the give and take comes from in terms of what is actually affordable in retirement. The 4% rule, quite honestly, a really good starting point to judge yourself in terms of how am I doing in accumulating assets for retirement. And if you're under that 4%, it's a really good indicator that you're off to a fantastic start and you can probably pull things off. If you're not there, it does not necessarily mean that you're screwed. No. But it does mean that you need to do more work. If you have questions and you're trying to evaluate your own scenario as you head into those retirement crucial savings years, give the folks at Armstrong a call. Let us guide you through our process. 800-393-4001. We'll work one-on-one with you to assess your process, make sure it's working in the way that you think it is, go through all sorts of things like tax planning, Medicare planning, how all of these different systems are going to affect that plan. But you got to start off with the call, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
My life screwed. Korean investors stress out after AI bubble bursts. That is the headline from the Financial Times. And, unlike large institutional investors where, look, you bought the ticket, you got to take the ride. Like, that's the deal. Sometimes, that's just how it works out. I have a whole lot more sympathy for people who are, traders who have things go against them. Because I've been in that, place with my own money, plenty of times as well, where, hey, you learn some really hard lessons about, this is why you don't invest in a market you don't understand. Or, oh, here's why this security was priced the way that it was. And with South Korea, the estimates that we've seen are that somewhere around 3 to 4% of the population got margin called in the last several weeks. And I feel for these people because they're hard lessons to learn, and that, hey, the stocks that were going up, 5 or 10% a day, they're not going to go up 5 or 10% a day forever. We all understand that. And it's easy to look down on people who made those mistakes and be like, oh, you should have known better. And look, if you've invested and never lost money, congratulations. You're the first person alive who's ever gotten through investing in stocks without losing money. Because I've had plenty of times where I've done something stupid, and you try to learn from it and do better next time. With this situation, in particular, given the amount of leverage employed and the volatility of these positions, there are some people that the one that I've seen that I can't verify that it's real, but I think that it is. There's someone, I don't know where they're from, but they had made $27 million over a 6-month period and are now back down to 4.
Still got $4 million, but
you still have 4, but not 27.
Yeah.
And the question is, are they just always going to be chasing that, that number that they had gotten to? And I don't know.
That story to me feels so very much like the .com era bubble. I just know so many people who today are in their 50s.
Yep.
Who either
made
worked
millions,
for a
then
company.
Lost millions.
Yeah, the ones that I feel really bad for are the ones who made millions based on working for a company whose stock price was in their portfolio, where stock was in their portfolio, but they literally weren't allowed to sell it.
Yeah.
Those are the worst ones I hear about. I was literally weeks away from being able to sell all my stock and take the cash, and then the .com bubble burst, and I was back to stock options that were literally worthless. But a lot of this happened back then too, and I got to be honest,
it's nothing new under the sun.
Nothing new, and it's also, I don't think you can look at the AI market right now and say, oh yeah, there was a bubble and now it's popped.
No,
maybe in some Korean stocks, but yeah.
What I think you can say is in memory stocks and chip stocks, some of the froth has come off, and now what happens after the next couple months is going to be determined by, hey, what do we actually see from those companies going forward and the earnings that they're able to present? Because there's a path where, okay, this is not just a temporary thing, and you see these companies continuing to grow, and okay, you can start to regain your footing, probably not doubling in a month, which is not healthy for anyone. There's also a path where, okay, maybe it becomes apparent 3, 6, 9 months from now that, yeah, the AI trade has peaked, and that industry is seeing, sharply decelerating growth, and there's another leg down. It could very easily be both of those.
Yeah, remember that the tech bubble was not defined by a straight line up and a straight line down.
Nope.
It was defined by a number of sharp drawdowns followed by sharp rallies, some of which took you back past where you were on the previous high, and a lot of head fakes that were really, really tough to identify. And again, not that we are going to repeat ourselves, but I would sure be surprised if it turns out that we are in an asset bubble in the U.S. stock market, or in tech stocks in particular, if it ends up just popping to a straight line downward at some point. That would be extraordinarily irregular.
Risk management, diversification, understand what they are, how they work, and how they prevent you from running into these situations. Let's take a quick break. When we return, we've got LaMonica from Barron's joining us next.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
The most important part of an inheritance isn't always the money. It's making sure your family is prepared for what comes next. Hi, this is Chuck Zodda from the Armstrong Advisory Group. Too often, important estate planning decisions are discovered only after a loved one has passed. Your plan may be very specific, but it can still fall short if your family doesn't understand your wishes. Our new guide, Talking to Your Kids About Inheritance, explains how thoughtful conversations today can help create greater understanding tomorrow. You'll learn when to have these discussions, how much information to share, and why clear expectations can help your family navigate the future with confidence. You can get your free guide today by calling 800-393-4001. That's 800-393-4001, or request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Many people assume that if an asset is irrevocable, it's completely out of their hands. That's not necessarily the case. Cushing & Dolan's new guide, Unlocking the Power of Irrevocable Medicaid Trusts, explains how these trusts can help protect certain assets from the cost of long-term care while still allowing you to maintain important rights and flexibility. The guide breaks down some of the common misunderstandings about irrevocable trusts and how they actually work. It explains why many families use these trusts as part of a broader plan to help preserve assets for future generations. Inside, you'll also find information about how these trusts work, what types of assets may be appropriate to transfer, and why the details matter when it comes to protecting what you've built. Get your free guide today. Call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
As promised, we're now joined by the one and only Paul LaMonica from Barron's. And sometimes we talk about companies with Paul that none of us have heard of. Sometimes we talk about companies that none of us can understand. Today, we're talking about a sandwich shop that's going public, and its name is Jersey Mike's. Paul, how you doing?
I'm good, thanks. How you doing?
I'm great. I didn't even know that Jersey Mike's was going public until earlier this week, and then you started getting some buzz floating up. What's the deal?
Yeah, it's fascinating. Jersey Mike's, incredibly popular Subway shop, sandwich shop. You've all seen the ads with Danny DeVito and two-time Super Bowl champion Eli Manning. Sorry, I had to do that.
Never heard of him.
Never heard of that guy. Exactly. Waiting for Tom Brady to be in a next commercial.
Exactly.
That'd be amusing. But no, Jersey Mike's is a popular franchise that has recently, in a customer satisfaction survey, supplanted Chick-fil-A as the most popular fast casual restaurant chain in America based on customer satisfaction. And Jersey Mike's is able to keep its own costs down because they are mainly a franchisor. They don't operate many of the stores that have the branding on it. But revenue, same-store sales growth has been growing pretty rapidly over the past couple of years because of the popularity of these sandwiches, which I think a lot of people like the fact that they are legitimately good Italian cold cuts and other types of sandwiches, hot and cold, that are made right in front of you. And not to sound like a company shill, they taste pretty good too. My family loves them. The question now is, should you buy the stock? The valuation is very steep. It looks like it's going to be going out trading at 10 times sales from last year. That's like double the valuation for many other popular fast casual restaurants like Wingstop and Cava.
Yeah, it's a question of, anytime you're talking about this business, it's also one, in my opinion, of, look, we've seen kind of how fads have moved in that industry, even just within subs. I mean, I remember when Quiznos was, the big up-and-comer, and then they tried to go head-to-head with Subway on price and got bludgeoned. So it's kind of like, okay, how do you know that you have staying power, I think, is a real question in a business that depends on staying power in order to justify those prices.
Exactly, and I think that's going to be a challenge for investors going forward. We all know that there are many food fads, and who's to say that over the next couple of years, Jersey Mike's is going to remain as popular. Obviously, a lot of investors have to worry as well about, health and food safety. We've seen that with the recent concerns about Taylor Farms. It doesn't take much, just ask Chipotle, for a stock to get hit if you have any public health concerns. Again, not suggesting that there's anything going on at Jersey Mike's that's going to lead to that, but it's a risk for, I think, any restaurant company, and investors have to be aware of it.
Very good. Paul, appreciate you joining us today. I hope you have a great weekend coming up, and we'll talk to you soon.
Thanks a lot. Have a good one, guys.
That is Paul LaMonica from Barron's. Mike, you ever hear of LinkedIn?
Yeah.
You ever go on LinkedIn?
Occasionally.
I generally try not to, but once every couple months or so I pop over there just to be like, okay, show me, whatever corporate people are talking about.
Uh-huh.
So,
which is usually some iteration of, I had dinner with my nephew, and here's what it taught me about business ethics.
Exactly.
Yeah.
So, LinkedIn, in my opinion, sucks. I despise it. Like, no one's like
as you
themselves
can tell from
there.
That summary I just gave.
Like, I just find it to be the fakest place on the internet, and that's saying something.
Uh-huh.
So, I did like a pop over to LinkedIn this morning. And was just, poking through, and literally it's like, here's what my dog taught me about this, or here's, this is me having a colonoscopy. Like, literally, I'm looking at this right now.
And here's what it taught me about the healthcare sector.
So, what's interesting is, I was like, okay, maybe I don't want to see posts from this person anymore, and, can I do that? So, you know how they have, the little ellipsis, button with, the three dots?
I do.
So I click on that on one of them. And there's a menu where it's like you can save this post, you can copy the link, you can embed this, you can unfollow, say you're not interested. There's a new option on LinkedIn now, Michael. And I'm not making this up. It's got the a big diamond with an exclamation point in the middle, so, you know, kind of like that danger, like, whoa sign. And the text reads as follows. Seems like AI slop. LinkedIn apparently must be getting enough complaints about people just putting AI slop into LinkedIn that they now have a way to flag if you think a post is AI slop.
Also, LinkedIn, you're owned by Microsoft. Do you think you might be better at detecting what is AI? If your goal is to decrease AI slop on the site, don't you think you'd be pretty good at detecting that?
I think, probably. But the counter to it is in giving a user agency, it makes the user feel good about it. Like, ooh, I'm going to get rid of this. And also, then this is here's my cynical view on this, is that by getting users to flag what they think is AI slop, Microsoft can then train its AI to not sound like that.
Yeah, that's true.
That's where I think the real goal of that puppy is.
Boston Globe has a piece today. The title, Between Prices and a Diarrhea-Causing Parasite, Lettuce is causing hard times at some restaurants.
I think it's really the diarrhea.
I was going to say, you're really putting those two on an equal scale here, and I don't think the prices have anything to do with it. I really think that if restaurants are having a tough time selling the lettuce, it is about the diarrhea and not the extra 30 cents.
Yeah.
I just found that to be the funniest headline. Like, there's two things going on. Prices are up a little bit on lettuce. Also, a fair bit of it seems to be causing diarrhea all across the country. I wonder why people aren't buying it.
Yeah, when forced
Probably
to choose,
not the
like,
price.
Is it the price or the poop? It's always the poop. You know, like the comparison would be like, hey, like, you know, with gas prices high, people don't want to travel to Canada's national forest this year. Or maybe it's the giant wildfires that are going through them.
Yeah,
you
it's
know?
probably one, not the other, but you take your guess.
You know? Ancient Romans loved going to Mount Vesuvius until one fateful day when horse prices went up. No, it was probably the volcano. Let's take a quick break for the rest of the day, and when we return tomorrow, we'll have more of us.
Hi, this